Hi, this is Peggy van der Plage. So today I want to talk about 5 strategies on how to navigate business transformation among the political uncertainty and the protectionism we're seeing right now in the world. So, unless you've been living under a rock for the past couple of months, it's been difficult to avoid the fact that there's been a drastic increase in political uncertainty and protectionism. So, at best, that has you intrigued. At worst, that has you panicked. If you are a business leader, I assume you're more likely to be panicked than intrigued. So I really wanted to talk more about what you can do about that, because obviously right now is a very volatile global landscape. And as a business owner, business leader, you're really facing increased pressure coming from, protectionist policies. You're thinking about the tariff, federal cuts, obviously, supply chain disruptions, regulatory shifts. So, I mean, companies cannot just wait and see. It's not an approach that is affordable anymore. It's just too dangerous. But again, it is not all bad. Like the best organizations, they use these challenges as catalysts for transformation. So you can rethink your input, you can refine your strategy, you can position yourself for sustainable growth. And that is something that is even more than ever important to do that. So how to navigate strategic disruption. So again, here are 5 strategies and actionable steps for business leaders. So the first one that's super important, again, as we discuss tariff protectionism, isolationism, is to diversify your supply chains to minimize risk. Because a single source dependency, and whether it's a supplier, a market, logistic hubs, that creates concentration risk. And if one node fails, your entire operation is vulnerable. So if you look right now between the geopolitical tensions, the trade restrictions, the supply chain shocks, it really makes it more apparent than ever that you really need to diversify your supply chain. So how do you implement that? First thing is you need to map your supply chain and your supply chain risks. So identify the vulnerabilities in your current supplier network, including political risks, even if the political risks are linked with allies, or at least countries you thought were allies or who were allies in the past. Be really honest and look the situation as it is and not as you wish it would be. So really include these political risks when you map your vulnerabilities. Look at the single source dependencies. That again is a vulnerability, the tariff exposure. So again, that is your first step. Map your supply chain and map the risk. Second step is expand nearshoring and friendshoring. And I know that might sound daunting, but shifting sourcing and production closer to home or to geopolitical aligned countries really going to minimize your risk. If you look at it, that's step number 3, this idea of dual or triple sourcing strategy, you want to secure at least 2 backup suppliers for critical markets, but also renegotiate your contracts to include flexible sourcing options. So that is your third action step. And the fourth action steps is strengthen local partnership. I think that one is very important. Establish relationship with domestic suppliers and logistic providers so you can navigate the trade barriers. So again, first strategy is really about diversify supply chains to minimize risks. And you do that by first you map your supply chain risks. Second, you expand nearshoring and friendshoring. Third, you have a dual or triple sourcing strategy. And fourth, you strengthen your local partnership. So, I've seen that at the start of a pandemic. So I was a founding board member, sorry, of Invest in Canada, and nearshoring was very front and center. We really worked closely, like with businesses, policymakers, global investors to reposition Canada as a secure and reliable supply chain amid, all the shifting geographical and geopolitical tension. So that's something I've seen with the pandemic actually, and that is coming back right now with the pressure we're feeling from the US and the Trump administration. An example might be the Apple's shift to India and Vietnam. So Apple, that was extremely dependent on China, has strategically expanded iPhone production to India and to Vietnam to hedge against the US and China trade tensions. So the biggest mistakes you and companies can make is really to react only when a crisis hits. And, well, technically we're already in the middle of a crisis. So we're a bit on our back foot here, but it's like everything in life. Proactive diversification is cheaper and more effective than scrambling when you're under pressure. Might be too late for that, but ideally that's the position you want to have. So the second strategy is invest in political risk intelligence and scenario planning. So it matters because most companies react to political and regulatory shifts instead of anticipating and preparing for them. And the best businesses build risk intelligence teams or work with external advisor in order to continuously assess political changes and preempt market shifts. So how can you implement that? So the first step is establish a political risk function. And, you don't have to dedicate a team. You can if you're a large organization, but you can also work with an external advisor or advisors to really monitor policy changes, regulatory trends, trade developments that impact your industry. So again, you're on your front foot. The second step is create scenario playbooks. And what I mean by that is develop contingency plans for different outcomes. For example, increased tariff, sanctions, new regulations. So predefine the actions that you will take for each scenario. Again, being on your front foot. The third step that I really recommend is engage in government and policy groups. So actively participate in industry coalitions, trade groups, policy forums, so you stay ahead of upcoming regulations. And hopefully you can advocate if you're not very keen on the regulations, which is called advocacy or lobbying. The fourth step is use data-driven policy monitoring. So you can leverage platforms such as The Economist intelligence unit, World Bank data, HBR reports to really track trends and predict market shifts. So that would be also one of the steps. So again, second strategy, invest in political risk intelligence and scenario planning. So first, establish a political risk function. Second, create scenario playbooks. Third, engage government and policy groups. Fourth, use data-driven policy monitoring. So what I have seen, so I maybe you've read already or you've watched already this podcast, but last week I was in Washington and I was plugged in high-level discussions, and so interesting to have inside scoop on shifting landscape of business and policy from insiders, because understanding the pulse of decision makers in real time is invaluable. What's being said behind closed doors is often a preview of what's going to come next in policy and regulation. So very, very important to be plugged in, maybe you directly, maybe through someone else. Tesla was a good example of that. They actually led their market expansion in China very aggressively before the relationships between US and China worsened. So securing early regulatory approvals for, its gigafactory and ensuring market stability. So that is something that you can do as well. You don't need to be Elon Musk. If you know where the market is going, where the regulations are going, you can be on your front foot. And the biggest mistake, again, is relying solely on news headlines, gut instincts, instead of structured risk monitoring and scenario planning. So the third strategy is reallocate capital. You cannot cut your way to greatness. So that really matters because cost cutting is essential. But companies that only cut cost without reinvesting, like you just shrink into relevance. You need to reinvest for growth. The best businesses strategically reinvest savings into innovation, new markets, competitive differentiation. So how can you implement that? So you can apply first the 20% rule. So it's it's inspired from Google's famous policy of allocating 20% of time to innovation. Well, dedicate at least 20% of cost savings to growth initiatives. That's the first step. Second, prioritize R&D and digital transformation. So invest in automation, AI-driven decision making, customer experience enhancements in order to stay ahead. Third is fund, again with the savings you fund, fund expansion into friendlier markets. So use the cost reductions to enter high growth regions that align with shifting political landscape. So, for example, that can be European firms that are expanding into Latin America versus China. The fourth step is develop new product lines. So identify adjacent opportunities and use capital savings to launch competitive, differentiated offering. So again, this strategy, the third strategy, very important from my perspective, it's a bit reallocate to innovate. So again, reallocate the capital, the cost savings you generate into growth. First thing, apply the 20% rule. Second, prioritize R&D digital transformation. Third, fund expansion to friendlier markets. And fourth, develop new products line. So what I've experienced that very, very young. One of my first job, I was still working in France at the time. I was working for a portfolio company that belonged to Blackstone and to PAI partners. And I was in charge of cost efficiency programs and the reallocation to new initiatives. And that is really how you can see the companies like this one was able to not just save short-term costs, but also to reinvest in very long-term capacity expansion, product development, market growth. And for me, it was very, very insightful to see that early in my career, that it was not just about cost cutting. It was really about cutting costs, yes, but reallocating some of this savings to growth and new products, new markets, all that great stuff. So if you look at very traditional PE firms, they traditionally cut cost, put debt. But the top-notch PE firm, the Blackstone, the KKR, all these guys, they reinvest a portion of savings into business expansion, capacity scaling, market growth in order to lead to more long-term value creation. So I think that's a really, really important strategy. So again, the biggest mistake is companies that cut costs without reinvesting in future-proofing their business. I mean, eventually they will just lose market share to more innovative competitors. It's just the way it is. So that's the third strategy. The fourth strategy is strengthen market position amid protectionism. So with, the tariff, the trade barriers, the localizations requirements, there is an increasing need for business to rethink market expansion strategies, but also strengthen domestic positioning. So how do you implement that? First, assess market vulnerabilities. Identify which of your revenue streams are most at risk due to new tariffs, trade barriers, import-export restrictions. And again, don't look at it with pink glasses, you really, really want to be realistic here in terms of what really is at risk, worst case scenario in your business. So if tomorrow you have 25% tariff on your products in the US, well, what does that mean? If you're based in Canada, obviously, if you're based elsewhere, different percentage, but it is really about understanding what does it mean for you. So the second step is develop a made in your country strategy. And so if tariffs target imports, explore local manufacturing or branding strategies to qualify for domestic incentives. What I have seen so far, both in Europe, in the US, in Canada, is that even without tariff like in place, population have already changed the way they operate. So I hear business in Canada that have already lost businesses from the US because the US want to do made in the US. Same thing with Canadian who don't want to buy American. You see the same thing with the European. So having really this made in whatever your country is gonna be important because population habits are already shifting just because of the rhetoric, even if nothing has been enacted yet. So keep that in mind. So again, no pink glasses here. The third step is expand into new geopolitically favorable markets. So shift focus to countries with aligned trade agreements and strong demand. That's going to be very, very important. And the fourth step is enhance domestic partnerships. So strengthen collaboration with local distributors, local suppliers, your governments in order to secure contracts and incentives. So this is the fourth strategy, which is about strengthening your market position amid protectionism. Fourth steps. First, assess your market vulnerabilities. Second, develop a made in your country strategy, expand into new geopolitically favorable markets, and fourth, enhance domestic partnerships. So, what I've seen in the past with working with clients is that, we developed new operating models for product and market expansion, ensuring that they can pivot quickly in response to shifting global trade policy while maximizing competitive advantage. I'm not saying it is easy, but that can obviously be done. You need to have the will to do that. It requires some work, it requires some investment, but on the long term, you're gonna again future-proof your business. So you can see, for example, Airbus versus Boeing in the trade wars. So Airbus leverage the tensions between European and US by shifting more production to the US. So they secured contracts that would have gone to Boeing by producing locally in the US instead of in France and Italy, I believe, or France and Germany. So that's the type of thing you also need to think. It's not necessarily just in your country, that can be in the other country that has put the tariff in place. The biggest mistake you can make is to assume that global trade will just return to pre-2025 conditions. I mean, that ship has sailed, adapt now or lose market access. I think that's just the bottom line. The fifth strategy is about your culture. Build an adaptive culture. Like your leadership really matters more than ever. Companies that have very rigid bureaucratic structures, they struggle in times of uncertainty. The organization that win, they empower their leaders, they empower their teams to make fast, informed decision. So again, all of that is about being on your front foot, having already the right leaders in the right seats in order to be able to make decisions fast when, pardon my friend, shit hits the fan as it is right now. So how do you implement that? First, you need to train teams and leaders for rapid decision making. So equip your leadership with crisis simulation training, adaptive decision frameworks, scenario workshops. Thinking creatively and thinking reactively, proactively is a skill that can be learned. So unfortunately, in large organizations, very often yesterday is the same than tomorrow, and the other way around might look like a Groundhog Day. You cannot think that way in our current time. So you need to have people who can really shift their mindset quickly. The second step is adopt agile organization model. So break down silos, enable cross-functional collaboration to speed up execution. I can even see, like some crisis committee, not to add a committee, but really to kind of, okay, that's what we need to do. Clack, clack, clack. I'm in charge, like special groups, special projects. That I think is very important. Third is create incentives for innovation. So reward risk-taking, experimentation, proactive problem solving in order to foster adaptability. It is very, very difficult to do that. Let's be honest. No exec or non-exec wants to risk their career, their bonus in taking risks. It's just the nature of the beast. So we, large organization, and I'm saying we, I'm not in a large organization anymore, but large organizations tend to see very reward risk-taking, but that's not true. They only reward risk-taking when it works, which obviously, well, it's not risk-taking. So, or maybe it's just luck. So that is the challenge, is that the personal agendas trump the company agenda. So I find it's very difficult to create incentive for innovation. And I was VP innovation in Canadian bank. I just find it very difficult. The last thing is enhance internal communication. So really, you want to ensure that leaders and employees understand macroeconomic and geopolitical risks and the impact on operation. Very often people have difficulty connecting the dots between what they read in a newspaper and what it means for their organization, what it means for their roles, and how they should align all of that. So again, fifth strategy, build an adaptive culture. First, you train teams for rapid decision making. Second, you adopt an agile organizational model. Third, create incentive for innovation as much as you can. And fourth, enhance internal communication. And, when I was VP innovation at CIBC, a Canadian bank, one of my responsibilities was to inform employees, leaders, executives about market shifts and emerging opportunities, because you want them to be equipped with the knowledge so they can navigate, uncertainty, they can make, strategic moves, bold moves. And it's so important to make sure that employees, leaders have the right information in front of them. So if you look, for example, at Netflix has a great culture of adaptability. They continuously reinvented themselves. Based on market conditions, from shifting DVDs to streaming, to global content investment, to AI-driven recommendation. And all of that is really thanks to their adaptive decision-making culture. The biggest mistake that can be made is leadership tips that fear change or delay decision making. That I see, unfortunately, all the time, and I saw so many times, because they will miss growth opportunities, they will struggle to compete, and they actually struggle to stay in business eventually. So these are the 5 strategies to really future-proof your business in these times of political uncertainty and protectionism. So final takeaways I want to convey. I've spoken a lot about individual transformation. Company transformation is very similar. If you don't change the inputs, it's going to be difficult to change the result. So transformation requires a shift in inputs. The situation you are right now is that you don't have the choice to resist change, because what is happening, all these exogenous shocks, is actually realigning companies and will force adaptation. So the question is, okay, are you leading the transformation or are you be forced into, I would say the last question is really, what is your next strategic move? That's something you really want to ask yourself. So thank you so much for listening, for watching. Really enjoy doing that podcast. Once again, if you have any questions, you can reach out to me. You can check out my website, peggyvandeplage.com. You'll learn more about me. And I hope you learned a lot and that you'll take some of these takeaways and bring them back in your businesses. So good luck with everything and have a great day.